I wanna meet your mom, kick it on the porch, drinking beer with your dad. I wanna see the stars in the bed of my truck, even when your day's been bad. I know you've been thinking about what he's been doing, but he ain't up to no good. Girl, you could do better than what you got going on right now. I'm talking about forever. So baby, just hear me out. Oh, he might have ran you down, put you through the ringer. Damn sure won't put a ring on your finger. Tore you apart, but I know what I'm doing. Let me do everything that he could. Oh, and he won't make you smile, he can't make you laugh. He don't pray for you, girl, he never had your back. He don't care if you know about what he's doing. Let me do everything he couldn't. You could do better
Order
than what you
filled.
got going on right now.
All right.
Talking about forever.
So
Baby, just hear me out.
So what we've got here,
Ran you down, put you through the ringer. Damn sure won't put a ring on your finger.
all right. So what we've got here is a trend following system that we had implemented on the 1 minute chart in making it intraday. I wanted to do intraday because of intraday margins. You can control a full ES contract for about $3,000 when you don't need $30,000 to hold it overnight. So, but it does put a lot of criteria, a lot of restriction on the system itself, and it was hard to find anything profitable. Making it intraday. I can show you the results here. Basically what it shows is years with different filters applied. 2023 you lose 12 grand, 2024 you lose 1,000, but then 2025 you make 54,000. It's like crazy. 2025 was a really good year for price movement on the intraday, at least in terms of for this system. Then I made it 5 ATRs away for entry. So I just want to show you quickly what that means. You can see that the red line is average, and each ATR movement away is that dark colored line. So the average is here, and if it pushes away 1, 2, 3, 4, 5 ATRs away, then we go long in that direction and trend follow. So it does that, it goes up, we go long, and we're going to wait until this thing comes crashing down to get out. It should trail stop for the most part, like this one. We get in long, and the red line, the average price, trails upwards, and then we get out at the red line, which is the average price. So we'll go in that same direction. That's generally what I'm talking about. And the average line is different based upon what I'm thinking. It can be the past hour of average price. It could also be multiplication of the ATR, a derivative off of the volatility. So the more volatile it is, the longer duration moving average it could be, giving it more space when it's more volatile. So that generally could work better, and I did test that, and it does work better, at least on the intraday time frame. You can see the best one was about 5 ATRs away to get triggered into an entry. We make 12 grand in 2023. We make 14 grand in 2024. We make 50 grand in 2025. Really, actually fairly consistent. That's an actually good system. Not bad at all. So what I did was test 2020 through 2024. So I excluded the good year, the super good year of 2025. I excluded that and just started doing 2020 through 2024. And we didn't see 2020 or 21 or 2022 results yet. And it brings it down substantially. It brings it down to negative money or positive 21 grand, which is not good for a 5-year sample. This one, what is it? No filters, made 70 grand. Oh, that's 2024 to 2025. So it made 70 grand in the past 2 years, but then it makes 21 grand the 5 years before that. It's like super not consistent. Really not consistent, and not good. So intraday, in terms of intraday, it was really hard to see how it worked, to make it work. Like, there are times when it works. See, the average line is the blue line. It goes down, triggers a short. It keeps on going down. We trail our stop, and then it comes up, and we get out at the end of the day, or hits the blue line, get out. It makes sense. It's a very simple system, but it's just not profitable in many years out. It's profitable this year, absolutely. It was slightly profitable last year, but 2020, 2021, 2022 didn't seem to be profitable in that intraday. It chopped back and forth too much. So it just, it's really tough to get a system to work all throughout the years. So what I'm doing is taking the restriction off that, I have to get out at the end of the day. I have to use intraday margin. We're going to take that off and see how things are. Is it easier to hold overnight? Is it easier to do this on a higher time frame trend following? Can we do it that way? So that's what I'm about to do. So first and foremost, what I'm going to be doing is testing on not a variable. You see how my red line is going kind of crazy because the volatility, it spreads, the ATR is spreading, so the volatility, the red line can get pretty far away from current price. Damn, my mean reversion system lost today. Lost 2,300. Not ideal. Not ideal, my friend. Not ideal at all. Not ideal. 2,400. All right, so now what I'm going to do is apply it on a 5-minute chart, and I'm going to make the past, I don't know. We're going to do a simple moving average of the past 120 bars. Sure. Doesn't really matter to me. We're just going to look and see how good it does or if it doesn't do well. Okay, let's send it. Okay, see how the red line is smoothed? That's good. So we're still going 1, 2. We're doing 3 R away to trigger an entry. So these are much bigger moves. We do not have to get out at the end of the day. We can hold for as long as we want. Looks pretty good. And by the way, this is on the NQ. We should go to the ES because we were testing the ES the last time. So we're just doing this on the ES. Plus, I don't have an ES. Well, I do have an ES system, but I'm going to save the intraday stuff for the MNQ. All right, so look at this one. Like, this looks great. See, it goes up, triggers along, and it holds. It holds all the way until the top, and then it gets out when it crosses over that red line. I don't have to have the ATR, but I like to see that ATR. How it could lower volatility. You can see the ATR get diminished like that. But basically that's what it is. I think that's pretty interesting. But you can see there's a lot of false trades. So let's see the results. And this is when. This is March till now. But we need 60 days of data to get it to start it. So that's what it looks like. Basically starting in July. Okay, July. July till now obviously doesn't look that good. There was a massive victory somewhere. I just want to see what that happened. $8,700 in one trade. How? July 31st. Let's see that. Damn. July 31st. There we go. Let's see what happened here, because it's a pretty good trade. Bam. So what happened was July 31st. At what time? Yeah, this is a 24/7 system. So it triggered at 8:30 a.m. open. It triggered a short, and it continued a downtrend for a substantial period of time. Holy smokes. I don't know what happened in August. I don't remember that far of a down move, but we caught that entire move. Boom, all the way down till there, which is a good thing. That's one trade, because it never touched that moving average again. It was below it the entire time. And as long as it keeps on going in that direction, we're going to keep on moving in that direction. So what we get is break even. Break even. That's what we get. So clearly not good, but we didn't have any filters on it. Like, what was happening to volume at this time? What was so special about this move? Was it low volatility? Yes, it was. It was coming out of low volatility. It was growing in volatility. You can see from the ATR bands, and then it starts exploding downwards, basically. We could even say, let's trigger entries at 5R instead of 3, because 3 ATRs away, you get a lot of false trades. So let's see what happens here. So now we trigger, we're more late of an entry, but less trades. So let's see what happens to the graph. You still catch that massive move down. And you could probably do 6 ATRs or 7 or 8 or 9 ATRs, and you'll still catch this move down. So we'll still be all right. This one's slightly ahead, still not great. We still have a lot of false trades here that did not work. What was so special about this? I don't know. Let's do a different data set. Let's just do 2024 at this time. I don't want to mess around with just one large win. So let's see what 2024 has in store for us. What do I think? I think it's going to be negative. Generally is. I just switch a data set and it's just broken. Okay, so pretty break even. Again, it's just really mixed. It's really mixed bag. Even though we get in later, we get in after 5 ATRs away. Price has moved 5 ATRs away from the average price. And we trigger to go in that direction. But you can see just how many times it loses, where it goes long, breaks, goes short, breaks, goes short, breaks, goes long, breaks, goes long. Okay, this one finally didn't break, and that's why we see these results, which is pretty random, pretty bad. Market's down and up today. Wow, look at that bottom. Nice. When it slows down, my algo is probably going to go sideways on it, because this looks pretty fast. I think after I get a few of these systems done, whether it's profitable or I rule it out as not profitable, I'm going to drift into candlestick formations, because I have a few saved up that I've documented, like, oh, I want to test this because they could work. I just see a lot of times it does, but that could be confirmation bias, which I think people get tricked into all the time. So it's really not. I like to test. I want to be able to test it and make sure it's true. So, in terms of this, I'm going to test something here where we get in a lot. Let's do a high frequency one where it only has to go one ATR away for me to go in that direction. And this is going to be tons more trades. I'm talking trades all the time. Basically, whichever side of the ATR you're on, the moving average you're on, you're going in that direction. Very unlikely to work. We'll see. It's almost the same thing. That's ridiculous. It's almost the same thing. It quadruples the amount of trades, yet it has the same shape of the equity curve, which is really weird. That's definitely weird. Still, you can't get away from break even. I mean, how perfectly break even is this? Profit factor is not 0.99. You trade 571 times and you're down $900. Just brutal. So obviously that's not the move. So what is the move? I don't like the moving average because the moving average initiates our initiates our entries and initiates our exits. So the moving average is massively important. So we're going to change it to do ATR. We're going to do a multiplier of ATR. So ATR times 48. I just picked that because it was a 1 minute chart, but I'd like to see what that looks like. The reason being is this moving average, okay? The moving average right now is always the average price of the past 59 bars, which is 59 times 5 minutes. I don't know what that would be. But now we're going to do a multiplier of that ATR number. So, and I can do probably 25. The reason being is this moving average is going to change its look and it's change its frequency based upon the ATR. So let's take a look at what happens here. Let's take a look at a down move or a bigger move. Here's a bigger move. Here's a bigger move. So this up move right here, the red line is very smooth, but I want to do it based on volatility. So let's take a look at what that does. You can see immediately the red line is very much more tight to price than this one. But then when it's high volatility, it's loose from price. You see how the ATR bands widen up? It is becoming higher volatility at this point, going lower, which means we do not actually trail our stop when it's higher volatility. So that could be interesting. I want to see what happens there. Okay, you're still break even, but again, I don't want to get in only one ATR away. I want it to push away for price to get in. Let's call it 5 ATRs away. So instead of taking a ton of trades, we're going to take fewer trades, much fewer trades. So let's see what happens here. Yeah, we get in later. For sure, we get in later. Absolutely get in later. So let's see what happens. Wow, it still has the same shape, much less trades, nearly break even. Goes down and then comes up and then goes down again. It's just not. Again, it's just there is no edge there. I love the idea. Price moves away from us. Can we try 3 ATRs away? Sure. I don't think it's going to change much. What we really need to change is either that average price, we need it more accurate. We need some concept behind average price. The concept is just that price has been there. It's using an average of the close of the bars. So obviously price has been here. See this clump? Price has been here for a long time. And that's why the average price is in the middle of it. And then it goes up, and then average price gradually climbs up. We can loosen up that average price. We can even go on a bigger time frame. I'm talking, this is a 5 minute. Since there's no intra bars, we can go hourly. We can go on an hourly chart and, I mean, really see the market moves, the moves of the market on a much, much, much bigger time frame, which could be something too, because I'm not seeing anything intraday, but holding overnight, it's just not looking good at all. So I actually want to push out to, let's say a 60-minute chart. Yes, believe it or not, we are going to go way further out. Let's do a 60-minute hourly chart. It's going to get pretty gnarly. Wow. All right. Pretty gnarly. The ATR is not changing much. We have to shift that back to our standard moving average until we understand what we want our moving average to do. Do you think the market's going up or down? It's a downtrend, but then there's a V bottom, so, and it's coming up to this, I would call it a trend line going lower. It just seems like there's always a cluster here as it tries to create a reverse head and shoulders going upwards. I don't know. I mean, none of those words actually matter, bro. There's no numbers behind what I just said. That's why I can't even stand it anymore. I literally was so into charts. Now it's just like, it disgusts me almost, because I've been rug pulled. I believed in this, and now there was no real numbers behind it. There was just images, and yeah, my brain connects images that it worked. It did work. I can see this gradually going up and create a reverse head and shoulders. It's a head, and then shoulders are going upwards. It's a bottom. Like, I can see that, but sometimes it works, sometimes it doesn't. And there's no damn numbers, bro. We need numbers behind it. Otherwise, you're just going to be playing tricks with yourself the entire fucking time. So, yeah, I'm just have a burnt mentality in terms of that. So that's why I've been going way more algorithmically. So let's take a look at this moving average. We have an hourly chart. Oh my gosh. So it almost looks like a 5 minute, but it doesn't matter. These are many, many days we see on the chart here. Many, many days. And you see the moving average, there's a red. It's the average price. I don't necessarily need the ATR here. I don't think I need the ATR. I don't want to see the ATR. I just want to see one red line, please. It's just a little bit easier to see. Let's just go ahead and just look at the average price, please. There we go. So what happens is, if price moves away from the average price, we go in that direction. On the intraday time frames, pretty much across the board, 1 minute chart, 5 minute chart was break even or just non-predictable. No, we didn't test filters like volume. Was volume high at the time or low at the time and relatively? We didn't test that on the 5 minute. We tested on the 1 minute. I already did a thorough analysis on the 1 minute. And we didn't see good results throughout every year. We saw great results in the past 3 years, yet the past 3 years before that was negative. So negative or sideways, if anything. which was not good. So let's see if the higher time frames help it. We see like price moves, price moves. Look at this, August, price moves up. We take it. It can be overnight. It can be at the end of day earnings. It can be FOMC. It can be anything. We have a way bigger time frame, way bigger risk, but way bigger time frame. Why does it stop in October? I don't know why I'm not including the past few months, but wow, does that change things? Look at that. Well, that looks great. This is not built off of one good trade. This is many good trades. Wow, only 16 trades since July. No, you're not including the next 2 months. Okay, watch what happens on the next 2 months. We see this. Make great money swing trading using the trend following system. Now we're going to include the next 2 months. We're not including November, December. Any guesses if we made money in this system November, December? I like to hypothesize because it gets my brain thinking, and the system moves away from average price. I wouldn't even call it average price. I would call it current price. It moves away from current price. That's really what it is, because the average is derived from price being there. There's nothing special that happened there that makes it the average price. It just happens to be the price that it was hanging around at. So it moves away from current price in a strong direction. We take that direction. Let's say it went up. We take longs, and we will drag our stop as long when the moving average goes up. We'll just drag our stop with it. So the past 2 months, I think, has there been good movement? I thought there has been in the late November, but early November was not good for movement. So I don't know, but there has been a really bullish run. I don't know how higher time frame we are. 60 minutes is not big time frame. So I don't think we're going to catch like an actual large move like that. So my guess is sideways, because I don't know. Yep, sideways. So you can see that we were so good from July till October. We were good. 20 grand upwards in 15 trades. Then after that 20 grand, we still make another 15, but it takes many trades. No, it doesn't go down. This is actually a great chart. The drawdown is lateral and not longitude. So when the drawdown is longitude, we don't like it, because that's damage to our account. And that's, people see the damage to our, like if we're designing product for an investor, they're going to see their account drop, and no one wants to look at their phone and with their account going down. So if their account just goes sideways, that's actually a positive to me, in my opinion. So this chart looks great, and we didn't even do any filters at all. So what is this system? What even does this do? Let's just zoom in on any win. Like this just happened 11:25. Damn. This is so slow. The last trade was December 5th. And that's right now. This has been that many days. Oh my gosh, this is taking forever. We're way higher out. We're way out. 60-minute bars. We're way not in the mix right now. We're snipers from a freaking edge of a mountain cliff. That's what we're doing here. That's what it feels like, because this is like 11:25. This trade lasted the 25th, which is like Thanksgiving, until December 3rd. That's how long that trade lasted. I guess that's not that long, but it's almost a week. This is like swing trading, I think. But anyways, price moves away from the average price. We go long, and then as price dwindles off, it brings the average price upwards, and then we get out, and that's it. There's no end of day exits. There's no end of week exits. I just want to check the largest win and see if was just a gap or something lucky. 15 grand we won. Oh, in April. April, buddy. April. Well, we should actually see what happened in April. I say that because April was very volatile. The tariff talk in early April was ridiculous. Market went up like 12% in a day. Isn't that what happened on the NASDAQ? April 2nd. Pretty sure that's what happened. I don't know. I don't track it like that, but I know shit was crazy. This is what happened in April. Let's see here. Early April. The market crashed, yes. So it doesn't look like it much because I'm used to 5-minute charts, but this is a lot of movement of price. Price moved from here all the way down to here to form a double bottom, and it moved 800 points on the ES, which is pretty decent in terms of the percentage. It was down 14% in the span of a week. So yeah, the market was moving, and we caught that. We catch movement. That's what this system does. It catches movement. So I'm guessing, I would assume it doesn't work well this past summer. There we go. My sideways system has started. Good morning, sideways system. Good morning. Good morning, sideways system. Welcome to December 10th, my friend. It made 1,300 yesterday. It's just doing really well. Very proud of him. He's a good guy. So anyways, there's an FOMC statement today. Cool. Very cool. All right, so it goes short, and then it comes back and we get out. Okay. Then it goes long, we get out, we lose. It goes long, we get out, we lose. We go short, we get out, we lose. We go long, we get out, we win a little bit. We go long again, we get out, we win a little bit. And then we go long, we win a decent amount. So we kind of just ride price wherever it wants to go. This one was a large win. And apparently it does really well. Apparently it does pretty well. So what can we do about it? Well, I want to test 2024. This always happens, bro. It looks great. Watch this. Watch this. Watch what happens in 2024. The exact same settings. I'm not doing anything. Oh, this is 2024? Oh my gosh. What the fuck, dude? July of 2024. Interesting. Hold on. I didn't realize we're that far out. I'm literally really used to intraday systems. You have no idea. 2024 rocked it, dude. 2024 rocked it. Let's just test multiple years here because we can. Because this is a huge system. I don't care. Let's just do 2022 onwards. I mean, it's a system that is so higher time frame that I really don't care. I'd rather just, you can test so many years because it takes a week to exit one trade. So yeah, we're going to test multiple years here. What's your hypothesis? My hypothesis is there's no freaking way this works. Why? Because you're just negative? Yes, but also it's just so simple. Is it too simple? Price moves away from current price. We go in that direction. We trail or stop. That's literally all it is. There's no adding. There's no scaling. There's no filter on it. There's literally no filter on it. volume doesn't have to be at a certain state. Speed doesn't have to be at a certain state. The average true range doesn't have to freaking matter. It can be low volatility, high volatility. Nothing matters, really. I mean, I don't know. Price does move, but I'm going to say break even. That's my hypothesis again. Break even, break even, break even. Okay. Throughout the years, throughout the 3 years, man, has a very, very big drawdown. And then ever since halfway through 2023, it has been in a great uptrend. Yeah, it's definitely skewed positive. This system is. So we can help this graph out dramatically if we see these losses, if we see the volume or average true range or a speed or something, some type of filter on the bad trades. We just want to see when it generally works. So I think I did a study on that. Okay. We can do that. Let's grab the data and let's just look at if volume matters. Let's do that quick. I want to catch the big wins. Want to catch the big wins. Oh, shoot. I exported to the wrong folder. It's all right. It's all good in the hood. It's all good in the hood. Look at that sideways system roll right now, dude. It's rolling, bro. It's rolling. It's just rolling. I hope it goes down and then it keeps on going back up. Where was this thing? Here we go. 1210. There we go. All right. So right now what I'm going to do is just look at the volume at the time of entry on these trades. So if volume was high or if volume was low, relative to what it generally should be. I just want to see if this lines up though. And it does. Nicely done. Excellent. Alrighty. Now we can do it. Now.
Order filled.
What's going on? I'm mean reverting short on the ES. Really? Cool. Why? Because it fit my needs. It fitted my needs to go mean revert this thing, which is scaling, doubling down on losers right now. I am doubling down on losers in this for the next hour on the ES. And I am also going sideways on the NQ. So we're both signals asking for sideways movement. Interesting. Okay. So overall, you can see it makes 36 grand. You can see the graph makes 36 grand as well. Not quite the straight line that I'm looking for. So what I'm doing right now is looking at volume. I want to know which one is the volume. Average volume. Okay, so let's just look at that. This is short-term volume. This is long-term. Wait, are you sure? Yes, that's the end of the print statement. Good. Long-term volume. Is there anything else? Man, that's a lot of volume per bar, but it's a whole hour of price movement. we can do ATR. So long ATR. Got it. Long-term ATR. Short-term ATR. Got it. All right. So let's take a look at this. I'm looking at the bottom section here where we make 36 grand on average or so. We make $139 per trade. That's what it is. That's our expectancy with the data set that we're given. So we make about $139 a trade. Not good, not bad. You can see that's what the graph is. That's what the graph is. And you can see the average trade net profit is $139, which is what we're getting. So I'm going to now basically filter on volume. And I want to see, let's say average volume. What is the average? 61,000 per hour. So let's say above 60,000. Do we keep a good average? So let's say above 60,000 volume in the past 15 minutes. Oh no, in the past hour. The average volume of the past 15 hours. Oh my gosh. So odd. This is designed for an intraday system, but I'm working with what we have here. What do we get? Our profit per trade doubles from 139 to 331. So obviously we make 41 grand. We make more money with 125 trades instead of trading 260 trades. So we make more money and we trade less than half the time. Less than half the trades and we make more money. And what's the filter that's different? The filter that's different is the volume is bigger than average. That's literally the filter. So if we do apply a filter and say immediately that the volume has to be greater than 60K, the graph is going to change drastically. So let's take a look at this. Now, the problem is I'm doubling down on shorts right now on ES. Doubling down on shorts. I repeat, doubling down on shorts. So anyways, that's what the graph looks like. The problem is I'm going to have to simulate as if I took the trade. That's the problem. Yeah. Because it's a long story, but basically if the price moves away from the average price and I don't take this trade, so let's just, for example, it goes up. This was not high volume enough, so I don't take the trade. The code is still going to search for a time when I can take the trade, which is when the volume goes lower. So let's say in this clump, the volume goes lower. Boom, now it takes the trade. When in reality, it's this is the breakout. This is the time it actually left the current price and moved upwards. This is when you're supposed to get in, not way up here, not up here or up here when it happens to slow down enough or make it or gather enough volume. I don't want that. So already this is probably going to pose a problem. We're going to have to add some type of code in there. But let's just see what happens at the start. In order to get entry, we're going to say the average volume needs to be greater than 60,000. There you go. And that's it. That's the only thing I'm doing. So that changes things. It'll change the graph. The graph was this, 260 trades, looks like that. Now we're going to take the trades, which are high volume, and it looks literally the same. How is that possible? It's because of what I was talking about. It'll just wait until it has enough volume and then trigger the long. So we're essentially taking the same trades. We're just taking delayed entries when it gathers enough volume. So that's not what we're looking for. So again, let's test this again. So if it ever does this, we'll put in if it does do this, and market position is equal to 0, then I'm going to say if it goes up away from the average price, we're going to say that it took a trade, but really it didn't. So in a trade is equal to true now. Okay. So if that happens, in a trade is equal to true. Okay. And then
Order filled.
target hit.
Order filled.
The sideways system, it hasn't moved yet. We're still short. But this one might stop out. That's fine. We'll lose 1R. Just wait until it starts snowballing sideways. It gets into a 16R position and it continues sideways with 16R. You make 16 times your risk every time. Okay, then you lose. Okay. Well, when you're winning 16x size in terms of position size. And when you're losing, like right now, I'm controlling 2 contracts, but I've already made 1. So I'm really risking 1R. It's pretty good. It's pretty good right now. All right. So for this one, in a trade is true. So now we need to make sure that in a trade needs to be true. Oh, wait, no. And in a trade is equal to false. That's true. In a trade is need to be true. No, it needs to be false. It's very confusing. I'm going to try to guess and check this thing. So basically, I want it to move away from average price, okay? But if this happens to be, let's say, not high volume, not over 60,000, which we found has edge, we're now not looking to take this trade at all. It needs to reset. It literally needs to go underneath the red line again. So if then in a trade is true.
Order filled.
In a trade is true, and then I'm going to say starts above. Starts above is true. Yeah, I think this will be good. We'll see. My voice is destroyed, mate. It's destroyed.
Order filled.
That's what's going on right now. What is going on with all these orders? I gotta see what's going on. Gotta see what's happening here. We're short. We short more. We get out. We go long. We win that. We're going short again. Good. Very good. We're mean reverting this thing, man. We're mean reverting. Yeah, we lost money this morning. So we've got to come back here and mean revert some more. Hopefully we can get out at break even in that system. And then let the sideways system take it from there. Well, the pre-market has seemed to be more movement lately. It's still not ahead, but yeah, we are seeing some drawdown in the pre-market system. Past 2 times I traded it, we're down totally
Order filled.
negative 3,600. Not good. Target hit again. It's tough. Interesting enough, though. All right. So this was more complicated than I thought, but basically, and a trade needs to be false. If in a trade is equal to true and starts above is true, which just means we're above the moving average,
Order filled.
and then the close happens to go underneath the moving average, then in a trade is false. And then we can continue looking for trades. Not sure if this will work. All right, let's see what that does. Man. Alrighty. So we should get very similar results to what we had originally. 36 grand, 260 trades. We got 230 trades. Why? What's going on? Why are we somehow not getting all the trades if I add that? I don't even have the filter on for AV for the average volume. We should get pretty much the same thing. Do we get pretty much the same thing? We get pretty much the same thing. I mean, I'll rock with that. I would like to know exactly what the difference is. They're pretty much the frickin' same thing, dude. Pretty much the same thing. In a trade has to be false, all right? So let's see what happens here. If I say now, volume has to be greater than 60,000. Now it's going to change things. Now it will change things. It should have much less trades. Should have much less trades here. Wow. The number of trades gets cut in half and we make more money. That's literally what just happened here. We take about 110 trades versus 220. Make from 30 grand, we make 40 grand. That is from the $60,000 filter or 60,000 volume filter. And that's not based off of just one good trade. If we look at the chart here, I mean, let's say greater than 5,000, or let's greater than $2,000 trades. Look at all the wins. We see a 16 grand winner. Okay, that matters for sure. That's half the freaking profit. 11 grand winner, 12 grand winner, 15 grand winner. There's winners all over the place. 7 grand, 11. Like all of these, let's say all the wins over 10K. What was the volume like? The main ones, the volume, the volume was 12K, so we don't include that. The volume was 56K. We don't include that. This one was 112K. Damn. Yeah, well, we'll include that one. 120K, double the normal. Yeah, we include that one. So we only actually catch 2 of the main wins. And I want to make sure that's what's happening. So June 9th, About June 9th, we should not have 16K in profit. Let's go to the day. June 9th, we should not have it. If it is catching
Order
these wins,
filled.
then something's wrong with our code. You can see June 9th is not even a tradable day. Didn't even trade. Good. We're not actually winning this large win. We're omitting it, which is what I want. I'm not just
Order
seeking
filled.
randomness. It's mean reverting right now, boys. August 9th, you should not take that trade. That one was really close. 56,000 volume. We need over 60K. So August 9th, I'm a little bit worried that it took a trade, and it doesn't. It doesn't take a trade on August 9th at all. So we're omitting these major trades here, which is a good thing. Not a good thing for the back test, but it's also a good thing that we're not curve fitting, just grabbing the main wins. I'm not seeking to do that. It makes sense that a breakout away from current price has high volume and it works better. That's what it
Order
does.
filled.
It works better. So that's what this system does.
Order filled.
Looks pretty good. Do I trust it? What should we do reasonably about this? Look, I mean, if you look at the annual results, annually, 2022 it lost $5,000, then it made $8,000, then it made 2024 made $22,000. This year it's made $15,000. It's pretty consistent. It is trend following. Do I want to take 24 trades in a year? That's so small. That how am I supposed to think that that's going to happen again? I mean, the market is not as predictable. It's not. That's why I like high numbers, because the market is not predictable, bro. It's not really predictable. So you trust 24 trades. Well, I'd rather trust 240 or even 2,000 for that matter. I'd trust if we have edge over 2,000 trades. I mean, you tried trading 2,000 times. It's harder. And that's just the normal nature of probability, is when you have a small sample, you can see it. Like, try shooting 10 free throws. You might be a 90% free throw shooter. Well, try shooting 100. You're probably not going to be 90, because in a string of 10 occurrences, you can have more variance in terms of edge. And we're seeing a high variance to the upside, but it's such small sample size. 24 trades, really. That's just not it, in my opinion. That's why I've been veering away from higher time frames like this. Yeah, it works.
Order
Does it?
filled.
Okay. You know what a good parameter might be? To test it on another market. To test the idea on another market.
Order
And if that
filled.
same thing persists, then yeah, then I'm listening. So let's test it on crude oil or gold or whatever. I don't really care which one. Bean oil, frickin' soybeans, corn, live cattle, copper. Copper would be a great one, I think. Let's do that. Is there anything limiting this to ES? Yes, the volume filter, but we can take that off. Is there anything else? No. Nothing is limiting this to the ES. This can move right to copper. So let's go ahead and move this to copper and see the results. High grade copper. Alrighty. Copper is thinking. It needs some time to think. It'll think again. Let's do that again. Just want to make sure that this average price is not effed up like this. I don't know why that's shows up like that. Why is the average price like that? There we go. All right. Hold on. I just want to make sure it's doing what we want. Looks like it's doing the same thing, man. One contract. It's the exact same thing. Position sizing is going to be different because copper is different. What the hell? Oh my gosh. What happened in copper July 30th, bro? What? In 1 hour? That's absurd. This is absurd. Did we catch this short? I hope not, because that's ridiculous. No, we didn't catch it. It went too freaking crazy. Or I don't know why we didn't catch that. I think it went too fast. But we don't have a speed filter on, which is, I don't know why. All right. It went down 30%, dude. Oh, sorry. Wrong one. It went up 30%. No, it went down from here. That's absurd. It went down, buddy. Oh, there we go. It went down 22% in 1 hour. Did we catch that?
Filled.
I guarantee you, in reality, we could not possibly catch that. It's going too fast, bro. Does this use 60-minute bar closes? Yes. That's why it didn't catch it. Now I get it. It doesn't take intra-bar orders. Wow. So yeah, copper is distinctly different than ES. But I approve. Everything is actually doing what we want it to do. Does this idea work on ES and copper? Does it work on copper? What am I thinking? I don't think it's going to work. I think it's going to be negative. Wowzers.
Order filled.
We've got break-evens. Break-evens. Not bad. Not bad. You know what I bet it would work on is gold. I feel like gold moves strategically like that. Wow. What happened 2023 that you lost so much? Is there one bad trade or something? The largest losing trade is 2,800. That's not one bad trade lost at all. But I tell you what, this is bad, but I reckon if we do the same thing with the volume and we find the average volume and we just be above that, I reckon that it would do even better. It's interesting that we get the same amount of trades, 210 trades. The previous one was 220 on the ES. So about the same amount of trades. That's pretty good. I like that because it's consistent. We are literally applying the same idea to different markets, completely separate and entirely different markets. Let's do crude oil. Crude oil is not going to work. I guarantee you crude oil will not work. Why? Because crude oil is a Mr. Chop Supreme. Mr. Chop Supreme is crude oil. Do you want some peppers with that, Mr. Chop Supreme? Yeah, I'll take a Mr. Chop Supreme. Peppers, some queso on that. Thank you for that one. Yeah, that's what look at it. It chops already. Look at the chop, dude. Chop is insane. This is going to be straight downwards. Yep. That's crude oil over the years. This system needs movement, bro. That's why I think gold will work or silver. But this system blows on on crude oil. On the equities, it does seem to be okay. Brutal, dude. Wow. Do you want to do the opposite of this system on crude oil? You probably should, but that would mean unlimited risk. But if you had unlimited risk and you had the balls to do that, you'd be up 80 grand. So in the past 3 years. So yeah, it's looking great. You could flip this thing on its head, and that's the best graph we have thus far, actually. So, wow. in about the same amount of trades, 240 trades. Pretty consistent. Let's try gold. Gold is break even? How? Okay, it's up 20 grand, but it's a break even looking chart, my friend. So, wow, dude. Well, if you do the volume filter, would it help? Probably. Made 30 grand this year. You can see it ran off. But the previous years, it actually did not help you. So if you just look at 2025, yeah, you made in 30 grand and 50 trades. So obviously better. I want to see the trade count on that. 200 trades, 205 trades. Great. Same thing. Now I want to check my favorite, bean oil. Bean oil. The old bean oil. My first ever trade was on the YM, the Dow. But I quickly went to bean oil because I thought I could master one market. No one's trading bean oil. It's an obscure product. It has just enough volume for my measly one contract. So I still love bean oil. Still love it. It's actually a great product, dude. It does move. It has enough ticks. The ticks per day is not like corn. Not like corn or live cattle where the ticks are so wide that you can't actually trade intraday. Bean oil actually has trading intraday. The ticks are small. Yeah. I forgot the number of ticks per day. Do we have that? Ticks per day is, I think that's wrong. 95. I think that's wrong, my friend. I think it goes way more than that. But it could be 95. Really? ES is 348. The ticks per day on NQ is 1,700. That's absurd. Gold has rallied. Gold was not this high. Because it's such a high value right now, the number of ticks that actually moves intraday is actually pretty comparable to NQ now. Gold is the next best thing in terms of intraday trading, in my opinion. NQ is by far the leader. The scalability intraday, it's like your micro little one contract, but there's big mountains. There's big mountains of price movement, literal mountains of price movement on the 5 minute, and you can catch 80% of it. Oh, you can catch 75% of it. Whereas on ES or copper or soybean oil, it looks like that big mountain, you can't catch like 75% of it. It has to be that price movement up in those 5 minutes was like, I don't know, 6 ticks rather than 60 ticks, So it's like slippage, commissions destroy you more, everything. Yeah. So that's why we want to save all intraday trading for NQ. That's why I'm testing this on ES and other things. But yeah, I mean, it doesn't look that good on bean oil either. Wait, did we check that? No trades generated on bean oil. Why?
Orders filled.
No trades generated on bean oil, dude. Why are you doing that to me? Why are you doing that to me, bean oil? What's not making that happen? I don't know, my friend. I don't know. Oh, the 1,500 thing. Yeah. Yeah. You can go 1320. Now try it. It's just some stupid thing that we're not even using is limiting it. Okay, it's pretty negative. About the same amount of trades. Again, it's break even. This system is really break even. I think the crucial path that divides everything is filters. It really is. If the volume filter, high volume, does that matter in each and every market, then I would trust it, honestly. If we do the volume filter on each one of these markets and they all point up because it's high volume breakouts, high volume pushes away from current price, then yeah, we can trust. Then I can trust it. But if it's just one, I mean, I'm not counting on that. 20 trades in a year, dude. I'm not counting on that. I'm not doing that. Not for me. What do you think about euro currency? Forex? Well, I don't think this is going to work. I think currencies notoriously do not move. So it's going to be similar to crude oil here in this case, because this system likes movement. That's why 2025 worked out well, because there's been movement this year. And we don't see anything. Why? Again, my friend. I know why. Gotta go back to 1500. Yeah, that's what I think is going to happen. I think it's going to be really negative, just like crude oil. Yup, pretty freaking negative, just like crude oil. Bonds would probably have the same thing. Yep. And then I want to check NQ just because it might differ from ES. Remember, ES was this. This was ES. This was ES's chart. Not that good. The way it went really well is because we applied that volume filter on it. So that's why. So I should probably just check volume on all of them. That takes a long time. But if I'm serious about it, yeah. Bonds actually looks great. Price movements, breakouts looks great on bonds, actually. Really? Bonds? Wouldn't bonds be the opposite? No, I mean, when price really breaks out, it does seem to persist in that direction. It's, yeah. Like we're short right now in bonds. Pretty good. Interesting. Yeah, okay. So that's probably it. I would check. I'm going to go back to copper and just check one volume filter on it and just see if we get the same results. And then I'm going to end this. That's what I'm thinking. So if we do get copper, you can see it's the same thing as ES. It's like messed up like that. Not doing much. And now I want to check.
Order filled.
Man, this thing's not going sideways enough. Now I want to check, what is it? Check the data. I'm going to check the data on this one. I'm going to check the volume filter, see if we can do it underneath average volume, see if that works. And if it does work again, then we're going to say like, wow, well, this actually has correlation. I've seen many times where I do something, oh, higher volume works. Yep, it does work. And then I check it on the next month. Literal opposite result. Which means we can't trust it. So in this case, let's see if we can trust it. And then again, brings up, can you ever trust anything? And, well, not all the way, ever. That's the answer. You can't trust anything all the way, ever, unfortunately. Well, it wouldn't be prudent to do so. All right, so let's say the average volume here is about 2,100. So I'm going to say over 2,000. Great, I don't care. Over 2,000. What right now we get is $32 a trade. This is copper. $32 a trade. Remember that the price chart looks like this. Looks like that. Kind of similar to the ES, like this, where it's not good, but we make it good with the volume filter. And if this volume filter also works on copper, we can trust it. In this case, it's $32 a trade. Let's make volume less than 2,000. we should get less than $32 a trade. And what do we get? Negative $91 a trade. You lose 10 grand when you trade with lower volume breakouts. Now we can say greater than 2,000. What do we get? We get $169 a trade. We trade less, we make much, much, much more. So what we're going to do right now is take a picture of this. Again, what I'm seeing, and I want the chart to confirm, what I'm seeing is that higher volume movements away from current price work. And that excites me a little bit because I wasn't expecting it to actually work on a different market. I never even thought of trading this on a different market, but the exact same trend following kind of guideline with the filter that it's higher volume than average seems to work. But let's see if the chart actually confirms it. I want the code to actually do it. Did it even think? Man, this goes that fast. Bro, I'm used to waiting 45 minutes for my results. All right. What? That looks like shit. Yeah, we end up making money. Really? How much are you supposed to be up with this filter on? You're supposed to be up 16 grand in 100 trades. You took 100 trades. How much are you up? 16 grand. Okay, we're doing everything. We're doing everything right. This is exactly right. So I just don't like this ridiculous drawdown. I mean, literally, if you started trading in May, it worked, but everything else looks horrible. So, yeah, you're not profitable, but that is really not consistent, bro. That is not at all consistent. Does it help you if you go higher volume than 2 grand? 2 grand just happens to be average. What if you're double average? Yeah, better, but you're not going to take that few of trades in multiple years. That's absurd. What about ATR? Well, ATR we didn't even look at. We could do ATRs bigger, whatever. You can do multiple things. So, at this point, yes. If I were to do this system, I'll tell you what. If I were to do this system, because it's low frequency, I would make a composite of multiple tradable instruments that I don't necessarily want to trade intraday, like copper, like frickin' euro currency, like bonds, like not ES, even though ES was higher performing, but I don't care. I would create a composite of an index of these systems and run the same system on all of them across the board and not customize much to each one. I don't want a curve fit. I think that's what most people do, is like, well, this works better if you use the 5
Order
average or not the past 120 bars, but the past 75 or 60 bars. That's your moving average set on. That works better. And you're right. It might work better, but it doesn't. Just because it works better on a back test doesn't mean it works better in real life. And that's what I've found. I've done systems that look fantastic in the back test that do not perform in real life. I saw it. I've done that. And I think the more robust, the more dirty, meaning the dirtier the back. I don't want a perfect back test. This is not really good. Yeah. But it also has a wide filter on it that applies to ES, copper, multiple other symbols. And if the concept works across many symbols, then yeah, I think that's trustworthy. But you just need time, and you just need many symbols to work for you, an index of these. That's what I would probably do. And that's similar to trend following, except I don't think this is what they really do. I don't know. I don't know exactly what they do. This is what I'm thinking, though. So the market moves in one direction. We go in that direction. We trail our stop. That's it. That's all there is to it. That's what the system does. If it's a high volume push away, it seems to work better, period. That's it. I mean, that has small amount of edge, but there is edge there, it seems like. So
Order filled.
this would be, obviously, it works better in the long term. This concept does not work as well on the smaller time frames. It seriously doesn't. I've tried working on that. So this is more of like an investing system. Like you put your money in the SPY, you put your money in the IBIT ETF for Bitcoin exposure. Well, you put your money in this index for a trend following exposure. It's a mixed bag across the board. Long, short, doesn't matter. It's a system. It's a symbol. It's like an index. It's like an ETF. It's a symbol that includes many symbols. It's an index. It's a portfolio of systems on a portfolio of symbols. But this is the actual only one system across the board. So it's a trend following one. So that's what I'm thinking. That's the benefit to this system. It's way higher time frame. I mean, what you see here is 100 trades in 3 years, dude. Yeah, you can load up contracts, but bruh, that is so slow. Yes, it's very efficient. Very good. It's very good, yeah. But man, that takes forever, bro. It took 6 trades this year. Yeah, I'm not doing that. I mean, that, does it make money? Yeah, why don't you do what makes money? It's just not doing much. You know, this is like, yes, I would put all the code in, I would backtest it all, plan it all out, put it on the computer, and let the computer do it within maybe a small portion of the retirement account or whatever. Yes, I would do that. Yes, I would do that. But in terms of my, in terms of like a system to actively manage, that's not this, bro. That is not this. This is not active at all, in my opinion. But yeah, it works good. Works well. So yeah, that's what I would be thinking. So, yep. And diversification's a good thing about it, honestly. The concept works in multiple symbols. Diversify. One symbol's not going to destroy you. That's pretty cool. It's actually a decent system. So I could do that, and because it's 60-minute bars, we can backtest multiple years, bro. Not the past 3. We can backtest the past 10 years. 10 even more than that. 10, 15 years. That's pretty good. Pretty good. So, anyways, that's about it. Thanks for watching, mate. Thanks for watching. All right, mate. Peace.